focusing on the evolution of responsible investing and on funds of the future.
The last decade has been the hottest on record globally in terms of temperatures. Six of the hottest years the world has seen have been in the last 6 years. The incidence of natural disaster has clearly increased over the last 3 decades on long time frames of observation. On the social front, there are still more fund managers called Dave than there are female fund managers, even in our own industry. So there's a whole equality, inclusion, and diversity agenda still to be tackled.
Even under the Trump administration, renewable investment in renewable energy was at a record level. Why? Because it's good economics, and that's something that we shouldn't lose sight of. Is the cost and efficiency of renewables with battery storage, that become a story of the future, has just made renewables now a sensible economic choice.
I do think that we're on the brink of maybe a golden age for more traditional industrial companies that are able to benefit from the energy transition. If you look at some of the things like hydrogen, for example, as an alternative fuel, the key players in that market are old European industrial companies who are, to some extent reinventing themselves, but taking advantage of new market opportunities. And the technologies involved lend themselves to those parts of the economy. It's industry. That's where the expertise sits. That's where the science sits. So things like carbon capture and improving battery life for electric vehicles and things like that.
I am an advocate for focus on this, but also a bit of balance. And there will be areas of the market, and maybe energy is one, where there'll be some oil and gas companies that will always be oil and gas companies, and you'd want them to do as well as possible in managing that risk and their profile in the context of an oil and gas industry, that is still vital and useful to us for the next 2 or 3 decades.
We don't label our funds ESG. We describe our approach as integrating ESG into the fundamental assessment of investment opportunities. Now, sustainable investment, I think, goes further, because that is where you seek to emphasize those companies where sustainability is integrated into their business model. It's part of the attraction of the business model, where they don't, and avoiding areas of significant harm, so areas with negative externalities, because they represent a potential risk that can become internalized into business models.
There is a lack of standardization, and I think we will move towards a more standardization going forward, and these scoring frameworks will be kind of less important. What I think will become more important, as Stephen suggested, is asset managers developing more credible and transparent KPIs for their strategies. So if a fund sells itself on its kind of ambition to achieve a lower carbon exposure, then it needs the necessary metrics to show that, just as we show alpha and we show volatility numbers in a traditional sense.
That does put a lot of emphasis on, the fund assessors and us as an industry to fully explain what our activities in this area really are, what's important to us and the strategy, and try and find and promote that to a matching set of sort of investors, and make sure that you've got alignment here, because I think it will be some time before we've got a unified, simple scoring dashboard or system that works effectively.
What I expect will be a big growth in government green bonds over the coming years, where the use of proceeds is predetermined, and it's going to finance green or social issues, social investments, and governments will need to develop their own KPIs in order to ensure that their money is being used in line with investor expectations.
I think the key thing, though, is whatever label you put on your funds as traditional, sustainable, impact, they really should be defined by the positive reasons for choice. That's ultimately what, especially as an active manager, you're making a limited number of decisions to take you away from the index. So really your investment approach, your approach to sustainable or ESG should be really framed through the lens of how it makes you make better decisions to lead, to still deliver what is our primary purpose, which is good, attractive, risk-adjusted returns for our clients.